Hey everyone, welcome back to Corporate Decoder, the place where we uncover the juicy details hidden in plain sight, and today we are diving deep into Neonode Incorporated's latest 10Q filing to see if this company is truly shining bright or if it is just a flickering light. You do not want to miss what we found in their financials, especially concerning a rather large patent assignment. Alright, let us get straight to it, starting with the balance sheet. As of the 30th of September 2025, Neonode Inc. had total assets of about $32.8 million. Now, looking at their liabilities and stockholders' equity, their total liabilities were around $6 million back then. What really jumps out on the balance sheet is the massive addition of a receivable from patent assignment of nearly $19.4 million. This is a huge chunk of their assets, and we will get to the story behind it shortly. Their current assets, which are things they can easily turn into cash, total just over $32 million. This includes $11.6 million in cash and cash equivalents, a slight dip from $16.4 million at the end of the previous year. Accounts receivable and unbilled revenues are sitting at about $649,000. On the flip side, current liabilities, their short-term obligations total just under $6 million. This means they have a healthy amount of working capital, about $26.2 million. Now let us talk about the income statement, because this is where the real drama unfolds. For the third quarter of 2025, Neonode reported a net income of a staggering $14.2 million. Contrast that with a net loss of $1.1 million in the same period of the previous year. For the first 9 months of 2025, they posted a net income of $10.6 million, a significant swing from a loss of $4.9 million in the first 9 months of 2024. This massive swing from loss to profit is largely thanks to that patent assignment we saw on the balance sheet. They recorded a gain of $19.4 million from this patent assignment. Essentially, they sold or licensed some patents and got a huge payday for it. But there is a catch. The report also mentions a broker fee expense related to this assignment of $3.9 million. So while they made a lot, it also cost them a significant amount in fees. Revenues from license fees were $406,000 in the third quarter of 2025, down from $731,000 in the same quarter of 2024. For the first 9 months, license fees were $1.3 million, down from $2.1 million. This indicates a slowdown in their core licensing business. Non-recurring engineering revenues also saw a dip. It was $24,000 for the 3 months ended the 30th of September 2025, down from $107,000 a year prior. For the 9-month period, it was $235,000, down from $335,000. This suggests fewer engineering projects are being undertaken. Despite the drops in license and NRR revenue, their gross margin remained incredibly high, above 97%. This means they are very efficient at generating profit from the revenue they do bring in. Research and development expenses were pretty flat, around $800,000 for the quarter, and increased slightly for the 9-month period to $2.8 million. This shows they are continuing to invest in new technologies. General and administrative expenses saw an increase of about 17% in the third quarter. This is mainly due to higher professional fees. Interestingly, they had no provision for income taxes in the third quarter of 2025 and a very small negative provision or a tax benefit in prior periods. This is likely due to accumulated losses that shield them from current taxes. Because of that massive patent assignment gain, they posted an income from continuing operations of $13.9 million for the third quarter, translating to 83 cents per S-hair. This is a dramatic turnaround from a loss of $0.07 per S-hair in the prior year's third quarter. Now, a quick note on discontinued operations. This part of the business, which seems to be their product manufacturing, is winding down. As of the 30th of September 2025, they had only $41,000 in current assets related to this segment. Looking at deferred revenues, they have $62,000 at the end of September 2025. This is revenue that has been collected but not yet earned, meaning they still have to deliver on services or products for this amount. Interestingly, there was no stock-based compensation expense reported for the 9 months ended the 30th of September 2025, which is unusual for a technology company. When it comes to liquidity, they have about $11.6 million in cash as of September 2025. They believe they have enough cash to fund operations for at least a year. However, they also acknowledge that if operations do not become cash flow positive, they might need to seek additional capital through equity or debt. Concentration of risk is a big theme here. 3 of their customers represented a colossal 83.8% of their consolidated accounts receivable and unbilled revenues as of the 30th of September 2025. This is a significant dependency. In the third quarter of 2025, Seiko Epson alone accounted for a massive 46.3% of their net revenues. Hewlett, Packard, and Alps Alpine were also major contributors. Geographically, Japan is their biggest market, bringing in 64.4% of revenues in the third quarter of 2025. The United States accounted for 23.5%. Their automotive segment remains a significant revenue driver, particularly in Japan. On the legal front, the company states they are not aware of any pending or threatened litigation that would have a material impact. This certainly provides some comfort. However, the report does highlight some concerns about internal controls. They mention material weaknesses in financial reporting specifically related to information technology general controls, and a lack of sufficient controls for income tax calculations. This means they need to shore up their internal processes. Looking at the cash flow statement for the 9 months ended the 30th of September 2025, net cash used in operating activities was $4.6 million. This is largely driven by the net loss before considering the patent gains and other adjustments. Investing activities used a small amount of cash while financing activities were minimal in 2025 after significant activity in 2024, which included $5.8 million from issuing shares. Okay, so let us connect the dots. Neonode Inc. has clearly had a very eventful quarter. The massive gain from the patent assignment completely masks the underlying business performance, which shows a decline in license and NRRRRRRRRA revenues. While the company is technically profitable on paper for this period due to the patent sale, the core business is facing headwinds. The high concentration of revenue from a few customers is a major risk. If any of these key clients like Seiko Epson or Hewlett Packard reduce their orders or take their business elsewhere, it could spell trouble. The fact that they have material weaknesses in their internal controls is also a red flag that investors need to watch. However, this patent assignment indicates a successful monetization of their intellectual property, which is a good sign in the long run. They are still investing in R&D, suggesting they believe in future growth. But the question remains whether their core business can recover and grow independently of these one-off events. In conclusion, Neonode Inc. is in a transitional phase. The patent deal has provided a much-needed financial cushion, but their core licensing business needs a serious boost. The risks associated with customer concentration and internal controls are significant. Investors should closely monitor their ability to ignite license fee growth and strengthen their financial reporting processes. It is a company with valuable intellectual property, but it needs to prove its operational sustainability beyond these large asset transactions. Alright, that is our deep dive into Neonode Incorporate's latest filing. What do you think about their patent windfall and the challenges facing their core business? Let us know your thoughts in the comments below. If this breakdown was helpful, give us a thumbs up and make sure you are subscribed for more incisive corporate analysis. And don't forget to join our Discord community, linked in the description for more in-depth discussions and direct access to our team. Thanks for watching, and we will see you in the next one.